Are you a business owner or entrepreneur considering using your company's funds to boost your pension fund? Perhaps you're playing catch up and have already maximised your annual allowance. Today I'm covering an interesting question. When is it worth paying more than the annual pension allowance? What are the potential benefits and what's the tax treatment? Hello and welcome back to my channel. If you're new here, my name is Hilary. I'm a financial planner in the UK and this is a place where you can become more informed and confident about money matters and financial jargon. So let's get started. First, I want to clarify the annual pension allowance. This is the maximum amount you can contribute to your pension each year while still receiving tax relief. For most, this is £60,000, but it can be less if you've already started drawing a pension or you have a high income. If you're a high earner with adjusted income of over £260,000, you might get caught by the tapered annual allowance, which can reduce your annual allowance to as little as £10,000. Watch my video on the tapered annual allowance for more about this. It's a strategy that might suit you if you're older and trying to catch up on previous years in order to grow your pension fund to give you a freedom fund for the future. Of course, the tax implications are significant and they require careful consideration. First of all, you need to make sure you've used what's called the carry forward rule, which allows you to use any unused allowances from the last 3 tax years. But if you've done that and you still want to contribute more, what are your options? Well, exceeding the annual allowance comes with a tax charge, but as I've said, this isn't always a deterrent. A pension fund is a really tax-efficient vehicle, including tax-efficient investments, tax-free lump sum, and inheritance tax protection. And for the company owner, there's also the fact that it's another way of setting aside money for the future without paying any income or dividend tax on the payment. So it's very much a matter of weighing up the pros and the cons in your particular circumstances. So now let's talk about the tax charge. So when you contribute more to your pension than the annual allowance permits, whether it's personally or via an employer contribution, the excess amount is subject to an annual allowance tax charge. The excess amount is added to your taxable income for the year and it's taxed accordingly. So this could be 40% or 45% depending on whether you're a higher or additional rate taxpayer. You can pay the tax personally via your self-assessment, or it might be possible to arrange for it to be paid from your pension fund. That's known as scheme pays, and I'll cover that in a future video. Funding above the annual pension allowance can be a really useful strategy, particularly for some business owners and entrepreneurs, people who want to catch up and grow their pension fund. So I hope that's useful. Please remember that this is a very simple summary of quite a complex subject. So I recommend that you seek professional financial advice to understand how these rules apply to you, especially when you're considering substantial contributions. Thanks for watching. Any questions, pop them in the comments below and I'll see you next week.